The current live stock price for Ondas Inc., trading under the ticker ONDS, is $8.99 as of the late morning hours on Sunday, May 10, 2026. Because the market is currently closed for the weekend, this figure represents the final valuation from the most recent active session. However, the movement leading into this weekend has been anything but quiet. We saw a dip of about 2.47% in the final hours of Friday's trade, bringing the market capitalization to approximately $4.38 billion. While most traders were looking at the red on the screen, a much more significant development was quietly moving through the SEC filings. This is where the gap between what the average retail investor sees and what institutional money is actually doing begins to widen. If you just looked at the ticker, you might see a stock that has pulled back from its January highs of over $15. But if you look at the recent $175 million acquisition of Mistral Inc., you start to see a company that is aggressively positioning itself to be a primary defense contractor. Most investors are waiting for the next quarterly earnings report on May 14th to tell them if this is a buy, but the real play is already visible in the backlog, which has surged toward the $450 million mark. The general belief in the market right now is that Ondas is a high-risk drone play with messy margins, especially given the negative profitability metrics we have seen in recent filings. There is a common narrative that the company is burning through its cash too quickly, and that the share resale prospectuses filed recently are a sign of impending dilution. However, this perspective ignores the massive liquidity cushion that the balance sheet currently holds. We are looking at over $550 million in cash against a debt load that is almost negligible in the grand scheme of aerospace and defense. This creates a situation where the reality of their financial stability is actually much higher than the expectation of a cash crunch. When you combine that with the $80 million in active demining tenders, including the recent $10 million order for Israel's security barrier initiative, the expectation of a struggling startup falls apart. Reality shows a company that is successfully integrating AI ground robotics and autonomous drones into mission-critical government infrastructure. The intraday movement on the last trading day showed a tight range between $8.65 and $9.10. Volume was healthy, staying around the 34 million mark, which is slightly below the 30-day average, but still indicates significant liquidity. For those using platforms like Interactive Brokers or checking their Fidelity mobile app, this consolidation phase looks like a classic cooling-off period after a massive run-up. The institutional activity has been particularly interesting, with hedge funds maintaining positions despite the recent 40% drop from the 52-week high. This suggests that the smart money is focused on the long-term contract lifecycle rather than the weekly price action. Sector momentum in defense tech is shifting away from traditional hardware and toward the kind of software-defined radio and autonomous systems that Ondas specializes in. If the upcoming earnings call reveals even a slight improvement in operating margins or a further increase in that massive backlog, we could see a rapid closing of the gap between the current price and the double-digit territory it occupied just a few months ago. At its core, Ondas Inc. is two distinct businesses working in tandem. There is Ondas Networks, which provides the private wireless broadband technology necessary for mission-critical industrial applications, and then there is Ondas Autonomous Systems. This second branch is the real growth engine, focusing on AI-powered defense platforms and drone-in-a-box solutions like the Optimus system. This isn't just about flying a camera over a field, it's about a fully automated 24/7 surveillance and response network that requires zero human intervention. The business model relies on high-value government and industrial contracts, where the initial hardware sale is followed by years of recurring revenue through support, maintenance, and data processing services. This razor and blade model is highly efficient once the initial deployment is completed, but the market often forgets that the deployment phase in the defense industry can take years of testing and certification. Past performance shows a stock that is incredibly volatile, with a 52-week range as low as 73 cents and as high as $15.28. This high beta of over 2.0 means that for every move the broader market makes, ONDS tends to move twice as far. This is a dream for active traders on the Robinhood app or those doing online investing through a SoFi active investing account, but it can be a nightmare for the faint of heart. The recent acquisition of Worldview Enterprises and Mistral Inc. highlights a shift from being a technology provider to being a full-scale systems integrator. By owning the manufacturing and the contract vehicles for the U.S. Army, they are removing the middlemen and capturing more of the value chain. This is a strategy used by the giants of the industry, and seeing a mid-cap company like Ondas execute it so aggressively is a major signal of their ambition. Looking toward the future, the primary catalyst will be the conversion of the backlog into recognized revenue. There is a massive expectation that the Mistral acquisition will immediately open doors to U.S. special operations contracts. If reality meets this expectation, the current valuation of $8.99 will look like a historical bargain. However, the risk remains in the execution. Integrating multiple large acquisitions while maintaining a negative operating margin is a balancing act that requires precise management. There is also the macro pressure of high interest rates affecting tech valuations, although the defense sector tends to be more resilient to these shifts due to the essential nature of the government spending. We are looking at a scenario where the next 6 months will determine if Ondas can scale its autonomous ground and aerial solutions to a global level, or if it remains a specialized player in specific regional conflicts. For those managing their own individual brokerage accounts or looking for investment help through services like Schwab Intelligent Portfolios, the decision here hinges on your view of autonomous warfare and industrial automation. If you believe that human-operated systems are being phased out in favor of AI-driven robotics, then Ondas is sitting at the center of that transition. The risks are clear, from potential dilution to execution hurdles, but the potential rewards for those who correctly identify the shift from a story stock to an industrial reality are equally significant. As the global demand for autonomous surveillance and mission-critical connectivity grows, Ondas stands ready to capture a significant portion of that market, provided they can continue to deliver on their ambitious expansion goals. The journey from 73 cents to over 15 was just the beginning. The current consolidation is simply the market trying to catch its breath before the next phase of the company's evolution begins to take shape in the coming quarters. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.